Ethan, good afternoon, good morning, good evening. Hope everyone is having a good day. I'll just wait like 2 more minutes to allow everybody to join. I don't know if there's a Twitter stream going on right now, but I have my stream scheduled for 5 p.m. Central European time, so it is what it is. Did it just end? All right, then just wait 1 more minute or 2 more minutes so that everybody can go to the toilet, grab something to drink maybe, and then come back to the stream. All right, very, very boring day. Nothing much happening. I feel like a lot of moves are happening during Asia. When will the fun start? When I go on vacation, man. That's usually when the fun starts. And the bad news is that I don't have any vacation planned. So I don't know what to say. Hey, Nodi. How you doing, brother? All right. I think we can slowly start. Whoever wanted to join already did. Cheers to you guys for being on the stream when the price is not good. That's exactly how it should be, right? You don't want to follow streams when prices are good. You want to follow them when prices are not so good. And even if they get worse from here, you should still stick to joining the streams, to doing your analysis, to trade, whatever it takes, right? And be absolutely comfortable and ready when prices are good again. So I've noticed a lot of change in sentiment in just a few days. We barely dropped, to be honest. Especially not on altcoins, which happens holding pretty strong. Bitcoin is down like 10% from all-time high, but that's really nothing. So very, very surprised. Very, very surprised because this is not even a correction, not even a flush. Nothing compared to what we've had previously this cycle. Like we had several 20-30% drops, which are very normal. Now 10%. But it is what it is. I guess most people just like good prices, or they took a lot of profits and now somewhere in holiday. I don't know. Okay, so let's get started. From the macro side of things, obviously we have Jackson Hole tomorrow. I think it will be a non-event. I don't think there will be anything significant that will be shared during the event. Powell will not be telling us if we get a rate cut in September. He will not be telling us if we get a rate cut in October. I think he will be telling us that they will look into the GDP data, into employment data, into inflation data that's coming up in August and some of them in September, right? Just a month-to-month approach. But that's fine. I think what will matter is if he is going to be more dovish than expected by the market, right? Given the recent sell-off in the market, I think the market expects the worst. So even if Powell is not really dovish, which he will not be, I think that's fine because it's all about expectations, right? And the market reacts relative to expectations and if they're met or not. So if the market expects Powell to be super hawkish, then if he's not as hawkish, then I think that should be fine for the market. But that does not necessarily mean that he's dovish, right? If you know what I mean. I still think that we will get a rate cut in September as things stand right now. There's still a 75% probability that can further decline, and it has declined, right? A few days ago, the probability for a rate cut in September was above 95%. Now it's about 75%, has dropped quite significantly, mostly due to PPI inflation data, but also ISM data. I saw it just being released was pretty positive, showed some increase in that as well. That basically means that the economy is doing better than expected, and as long as the economy is doing better than expected, and a PPI or CPI release comes in above expectations, it's always reason to believe that rate cuts will not happen or that the Federal Reserve will maintain their hawkish approach. And we can see the dollar rising immediately after this data release. Very, very easy to understand and to follow. It has been holding our key support that we have discussed when the dollar was probably around here. So roughly 10 days ago or something like that, we expected a retest of the zone. We said the reaction from the zone is critical to financial markets and especially speculative assets. We got a nice reaction. Conveniently, we did have pretty negative PPI inflation data, and now with the ISM data, I think it's not really helping the anti-dollar camp. And I think this will be influenced further by incoming inflation data and the data on the economy, because it will change the expectations regarding September, but not only September, but also October and the other FOMC meetings. So this will be very, very important to follow. The dollar will be critical to the crypto market. And again, we did have some pretty big resistance areas being tested, some 3-day bearish divergences being formed exactly at this support retest, right? So you can almost see how perfect the market aligns to the dollar. Very, very, very good indicator, and very important to understand where it is heading. I still think it has some resistance areas ahead of it. Obviously, the big zone will be the 100 area where the dollar retested a few days ago. I think this will be reached instantly and in a few hours if Powell is extremely hawkish tomorrow. Like if he says inflation is picking up beyond our expectations, if he signals towards a hawkish approach in the next few months, I think the dollar will increase significantly, probably just in a few hours. So keep an eye on that. If he's dovish, right, which is still a possibility, I think it can start dropping, and then we will need to see how it reacts from this zone here. But overall, a very, very important macroeconomic developments happening right now, which are influencing the crypto market as well. Doesn't that put us in a good position at the moment? If the market expects the worst from Powell, that is not met, we could get a little relief. It could, yeah. It's all about expectations, right? When the worst is expected, and we can tell from the CME target rate probability, which is declining, that the market actually expects the worst to happen during this Jackson Hole event. And that's good in the sense that even if Powell is hawkish and not as open to rate cuts in Q4, I think that can still lead to a short-term relief in the market because he's just not as negative as expected. But with Powell, you never know, right? So it's always good to see what he has to say, and based on that, we can then form our midterm outlook for the market. I still think that tomorrow's event will not change the higher time frame structure of things, right? It can be relevant on the short run, but I don't think like we will see a major shift of trend if he's super hawkish or super dovish. So I don't expect that. So that's it from the macro side of things. This week, apart from Jackson Hole, we don't have other macroeconomic developments. We have some next week, and next week will be very important because we have GDP data and we have PCE data. PCE data is the most important inflation measure for the Federal Reserve. And that's the measure that they always cite on every FOMC meeting. So That will be important. We will have certain expectations. I haven't checked them yet, but depending on whether those expectations are met or not, that will also influence the target rate probability for for September, sorry. And this will significantly influence the price action of the dollar as well. Higher time frame, the dollar, you know my thesis. I do think that there are many events that are negatively influencing it. Trump is doing his best to keep it weak, right? That's his goal. I still believe that it is bottomed for this year. I don't think the dollar will make new lows, and that would be below this 96 area for DXY. And if it starts pumping, especially if it starts accepting above 100, that could be quite problematic for speculative assets. So always something worth monitoring in the near term and in the midterm. Bitcoin, in my view, in my very humble and honest opinion, I think it's super easy to read. All you need to do is just zoom out, not look at 5-minute candles because they won't make sense, because market is just shopping. This is just pure chop in the last few days. Zoom out and you see what's happening. What is happening starting from super higher time frames? We have a 3-day bearish divergence, right? Which we have covered several times. Now, what will be important here is that after printing this 3-day bearish divergence, BTC on this time frame is testing the 50 area. If this holds, a nice timing, BTC. If this holds, I think that would be quite positive short term, but it is something worth monitoring, because if this starts finding acceptance below this, I actually do think that we can get a full 3-day RSI reset on Bitcoin. Very important. So 3-day bearish divergence, not something to be underestimating on higher time frames, not something that you constantly think about when trading on lower time frames, right? But something good to know, especially for long-term plannings. On more lower time frames, Bitcoin has lost this diagonal trend line here, which has been serving as support, which is not a positive development in my view. Not a positive development at all. Now, I do think that there are two main areas of interest that need to be considered for BTC short term and on more lower time frames. First, we got a perfect Monday low. Where's Monday low? Here. Monday low rejection on Bitcoin last night. Perfect, crystal clear. This is a big area that needs to be reclaimed. Huge area that needs to be reclaimed. Apart from that, say we do flip above this zone here, which is now serving as resistance and serving as Monday low. I do think a pump towards 118, 119 is in the books, and then we would have a small range here. But ultimately, I wouldn't be surprised if we do not get this at all, because this is a very crowded zone. It's a very obvious short area. And I know that a lot of people are waiting for this. So I wouldn't be surprised if we just reject from Monday low, from this box, and continue going lower. Now, in terms of lower, it depends on what time frame you're asking me, right? Obviously, we have different zones of interest, and with each zone of interest, we will evaluate local triggers. Ultimately, on higher time frames, I do think that if Bitcoin fails, all right, nice timing with the stream. If Bitcoin fails to reclaim the 120K area, so this area here, if it fails to reclaim this area here, I don't think that would be super positive on higher time frames, and I actually do think that there's a high chance that the top is in, at least short term. So that's something to be considered, especially given the 3-day bearish divergence. And my zones of interest would be, first of all, around here 11,300, where we can print a 4-hour bullish divergence. Right, so something like this, maybe wick down, then close the 4-hour a bit higher, and we would actually have a 4-hour bullish divergence, which I would try here at 11,300, this POC here. That's a viable option. Just for a scalp again, maybe it does turn into a swing. But for me here, I don't see any reason to long, especially not below resistance, especially not below Monday low. Absolutely no reason to be longing, because the structure of Bitcoin to me is bearish. This is not positive. This is not positive. I don't see anything positive here on top of the 3-day bearish divergence. So for me, as I said, I need this reclaim, then I would be optimistic for a move towards 118. If you don't get that, lower, maybe even significantly lower. So 111-ish. If maybe even a wick down to 108. And if we consider fibs, I wouldn't be surprised to even see the 105, 106K area. And that would be just a perfect breakdown from this diagonal trend line. Absolutely not unrealistic, absolutely something that needs to be considered. And given all these signals, I'm personally not interested at all in buying spot BTC. Maybe at a later stage, maybe if we have some more higher time frame divergences, I would consider it. But for now, this is a breakdown until proven otherwise. Even if it flips here, this can still be a bearish retest here, and then we can continue lower. As of now, we're only oversold on the 4-hour, right? We don't have any other time frame where BTC is oversold. Logically so, because it only dropped 10%. That's not the end of the world. Happens all the time, right? But this is my plan. So tried to explain it on different time frames. So a higher time frame, let's say the 3-day, not interested at all. If we ever get this yearly open, I might consider buying some spot. But on more lower time frames, 111, 108, and 105-ish. Imagine it just fully breaks down at some point and collects all these POCs here. So really prepared for any scenario. Any scenario. I hope that makes sense. For ETH, I think it looks a bit better, if I'm completely honest. On higher time frames, we tested this 4K area that has been serving as resistance several times this cycle. Perfect retest. I think a higher time frame acceptance below these highs would be very bearish, and I would expect ETH probably back at 2,700 at some point, but that's a long way to go, so we don't need to discuss that. We will only discuss that if we lose this area. But for now, this is a pretty big zone. On more lower time frames, what I'm looking for ETH is this diagonal trend line that has been serving as resistance in the last 2 hours. Right here. The structure is still in a downtrend, right? If you think about it. So I would, if you're in a position, what I would be looking at would be a breakout from here. And then maybe we can go back to this area here. Monday low and these POCs are a very big zone. I wouldn't want to see acceptance below this, below 4,190, because if that happens, we can assume that this can just fully break down. And then I would be interested in ETH at this 3,900 area. And I do have a limit, which is more of a stink bit still, at the monthly POC here and the golden pocket on fib levels. 3,778, I think, is my spot limit if we get a full breakdown. But that's more of a stink bit. But ultimately, higher time frame ETH does look a lot better than BTC. A lot better than BTC. So we will see how this unfolds. All right, is there any question? Nope, we can proceed. So Bitcoin understood. I think we covered it on multiple time frames, right? So should be clear. Long story short, Bitcoin higher time frame to me looks way worse than Ethereum. And that's something to consider. That can change at any time, depending on Bitcoin dominance. Remember, the 3-day bullish divergence, still something in play. We didn't see a market structure break yet here, which is positive. So that's something worth considering as well. If we start seeing some market structure break, I think it's GG for ETH and especially altcoins. So that's something worth monitoring here. If this just invalidates this 3-day, or if it actually pumps and breaks the structure here, which will be very important for the rest of the market as well. But considering how Bitcoin looks like, and if it actually breaks down the way we discussed, then I wouldn't be surprised if BTC dominance picks up pace as well. So very, very important here. Yes, hanging by a thread, but this is still a 3-day bullish divergence and has not been invalidated yet. If Bitcoin breaks down, yeah, and Bitcoin dominance starts rising, it doesn't matter if 4K is a support zone, to be honest. We'll just drag it down with it. So Bitcoin is still king, guys. I mean, I've said it many, many times. People get excited when Bitcoin dominance drops, and rightfully so if they have exposure towards ETH or alts, but you have to have Bitcoin rising as well. Bitcoin has to be strong for a sustainable move in the rest of the market. All right. So that is clear. Macro is clear. We discussed Jackson Hole. We discussed the dollar, Bitcoin, Ethereum. So I think that's the majors that are very important for now. In terms of indexes, nothing really has changed. What you need to consider, though, is this 3-day RSI on USDT dominance, which has been trapped under this 50 area the entire move down. Right? So every rise on USDT dominance has been met with a rejection on the RSI from the 50 area. We are seeing that again here. And I would personally set some alerts at these levels so that you're notified, because if this starts finding acceptance, higher time frame acceptance, right? These are all 3-day candle closes. Higher time frame acceptance and USDT dominance flips this 4.60 area. You will have confluence that USDT dominance is back in an uptrend. And as I said, apart from Bitcoin, this is probably one of the most important charts you need to consider. Because this is what has kept the market in an uptrend for the past weeks, right? Several rejections. Now we actually got the flip here. We actually also had a retest of this trend line here. And we will see how the price unfolds now. For me, it's very important on higher time frames to see what happens here. Lower time frame, anything can happen, I don't care. Higher time frame, this is interesting because this will tell me where the market is headed in the next few weeks and months. 4.60 is key, would be a definite change of structure with a higher high, and then we can literally target several zones here. The first zone would be 5%, 5.10% would be a pretty big drop in the market. And then if this happens, we will get these levels for Bitcoin that we discussed in a full breakdown. But this has not happened yet. We don't have a confirmation that the trend has been changed yet. We have a few signals that indicate that yes, it could change, but that has not happened yet. Now, if you are bullish and if you're long, what you personally want to see is that this starts finding acceptance below here again and maybe give a retest towards 4.20, maybe 4.15, basically taking out these lows and print a higher low. That's one option. Obviously, the most bullish option for the market would be simply testing cycle lows, just rejecting here, finding acceptance below, and then coming down here, and then we see what happens. So that's an option, and that's something you want to look at if you're bullish, if you're speculating towards higher. But personally, I would give this like a 30% chance of happening this year. Why? Because we have those higher time frame bearish divergences. And this would most likely mean that those get invalidated. I find it very, very hard to believe that a 3-day bearish divergence can get invalidated. If it happens, well, we will look for new setups, new ideas, but for now, that's something I consider. A retest at 4.20, I would say has a bigger chance of happening, right? But ultimately, it does not matter what percentage we attribute because that's only subjective, right? We cannot reasonably say this has a 20% of working out, this has a 30% of working out. We need to act based on confirmations. And the only fact right now is that this has found some acceptance above this trend line. Look at this. If you look at candle closes, I don't look at wicks. Wicks don't tell you anything. Candle closes are important. And this is the first time since the April dump that we have found acceptance above. So this is something I will keep monitoring. Maybe we'll see another push to 460, get another drop. But ultimately, if we hold this acceptance, I think at least 5% is in the books, and then we simply look what is possible towards the upside in the next few weeks. So I think this is very, very clear. But let me know if you have any questions. What else? I think nothing has really changed in terms of other indexes, right? 3-day bearish divergence on total 3, for example. Also not something I just ignore. Absolutely not. It's not something that stops me from trading, obviously. Still a lot of opportunities here and there. And I mean, opportunities never stop. Even if we go in a downtrend, opportunities don't stop, right? You can still trade. But like for long-term planification, very important. Because if this starts playing out, I think it leads to a broader correction in the next few weeks and months. So something worth monitoring. And this is also happening. Remember, this is also happening while we do expect some form of retrace on the S&P 500, right? And I think this will especially be accelerated depending on the outcome tomorrow. If Powell is more hawkish than expected by the market, I think this will influence stock markets as well, because it will influence the dollar. But I think a healthy correction would be here previous all-time high zone. And if this happens, then I think the drop in the market will be accelerated as well. So USDT dominance, certainly not something to completely ignore. Higher time frame divergences. Now, my zones haven't changed. My zones haven't changed at all for any of the indexes. I have higher time frame zones. I have lower time frame zones. Higher time frame total 3. It's very easy. You just go to May highs, right? May highs have to serve as support because they have been reclaimed in early to mid July. We had this retest a few weeks ago, remember? It was perfect for buying before the recent highs. Now we are in this range, higher time frame range, and you respect the range. We had a 3-day bearish divergence at range highs, which was a pretty big signal to take profits, right? We've talked about it. Now, lower time frames, my zones haven't changed at all. I still think it is possible that we do get a retest of this zone here. Fits perfect with fibs, with POCs. Pretty much a lot of confluences. But this also in a downtrend. Look at this. So that's something worth monitoring. 1, 2, 3 rejections. Ultimately, I really when the market accumulates a lot of open interest, right, after these parabolic moves, I rarely enter the market with full exposure without getting a liquidation event, right? Because I assume that at some point all these borrowed positions will capitulate, which leads to a bigger wick. And I think that's possible. At some point, would make it a lot easier to enter the market. But if it slow bleeds, this is my zone for basically any index. Others as well. I don't know what this is doing here though. Oh, this is others dominance. Others as well. Same picture here. Downtrend. Looks pretty much similar across the market, right? So we don't have a structure break yet on the 4-hour. That's something you need to consider for positioning. And zone of interest hasn't changed. 276. I think we can get a good bounce here, at least for some scalps. Or we wait for a structure break here, right? Breakout, see how price develops, and then potentially a bit of support. This will be resistance. Again, we talked about this as well, remember? 310. This will be your easiest bet. Here. Or, as I said, the retest lower. It's very important to understand the structure of these charts, especially on more higher time frames. It will make it a lot easier for you to know when to buy and when not to buy. And that's why I really started liking to draw these charts from a blank chart on stream, so you understand the thought process, right? And then can either replicate the methodology or the chart itself and follow this yourself. Bitcoin is showing a lot of weakness compared to ETH and alts. That's not what I like, to be honest. I said it before. You don't want to see a weak Bitcoin. You don't want to see a weak Bitcoin. Bitcoin has to be strong. If we ever get a daily bull div, I will be considering to buy spot again. But until then, with this structure here, not really interested. Let's see if we can get in the next week's daily oversold or something. I think that's pretty much it. Covered everything I had to. I think that's quite a lot. So maybe just take a few questions. And then just wrap it up. Do you mean any spot or BTC spot specifically you would wait for the day? I mean, yeah, of course. For spot, you wanna wait for Bitcoin, right? Because alts are super weak. I mean, I don't have any incentive to buy alts when Bitcoin looks like this. I mean, do you have any other take? For me, it's a very bearish structure, to be honest. Very bearish structure. Wouldn't be surprised to just see a full breakdown in the next few weeks here. Unless we manage to flip these big areas. But remember 3-day bearish divergence, right? No, I'm not interested in spot. And when I say I'm not interested in spot, I mean I'm not interested in positions that I hold for 6 months. You know what I mean? That's spot for me, right? Because otherwise I'll just trade on perps. But like for more long-term, mid-term stuff, I'm not really interested to commit to that in the 4th year of the cycle, if you know what I mean. Not sure if we covered this before, but what would those drawing overlays but that's you mean fib levels? It's just a technical tool that traders use. And then this is what I consider more important levels: 0.75, 0.69, 0.72. That's called the golden pocket. It's just a technical indicator that traders use to identify good buy zones or sell zones in confluence with other technical indicators. I, for example, use POCs as well, right? POCs and then RSI and divergences. I would say these are the 3 most important ones to me. No, they were outlining the price structure, not the fibs. This? There was more. I don't know. I don't know, man. If I bring it up again, just let me know. Do you pull fibs right to left, high to low, or which way you meant to do it again? From the lows to the highs. On an uptrend structure from the lows to the highs, from left to right. If it's a downtrend structure, you just do the opposite, right? From highs to lows. On any time frame, basically. Looked like a wave count or something. I'd clip it from the replay and ask, like, yeah, just let me know on the fundamentals, and I'm happy to help, man. Somehow I don't know which one it was. Wave structure. No idea. Maybe remove all my stink bits. Nah, man. I mean, stink bits are fine as long as they are on spot. A flush is never guaranteed to happen, right? I do have some. I've had a bid for Sui for like 2 weeks or so, and I think we will get it. It would be a pretty good zone for Sui to bid. So right here. But then we have to make sure that this trend line holds, right? At POC confluence as well. We have to make sure that the daily closes above this trend line. Because if this then starts accepting below here, I think Sui would be cooked, to be honest. And we would at least go towards $2. But I think it's worth trying. But we will always observe the price action. Are they stink bits enough? 2.8, yeah, for Sui is fine. I think SPX as well. I don't know if we get SPX, but to me, I mean, this doesn't look good. It does not look good at all. I think depending on what the market does, this can give a full breakdown. And remember that this is a meme coin, right? And a lot of interest has been around meme coins, specifically something like SPX that has been just running super, super high, 814%. That's absolutely wild. So it's very normal to actually have like 60-70% pullbacks on this. 70% would be wild, but not impossible to test this area here. So I think, yeah, that stink bid is fine. But remember to keep trading, right? Stink bids are just in case we get a flush, but they shouldn't be something that should limit you from intraday trading. When you have time, you can make a list of the indexes you look at in order and over what period of time. I mean, everything I covered in my corner, I cover in my corner, right? And on my streams, that's what I use. But I think USDT dominance, apart from like, of course, Bitcoin, USDT dominance is important. Bitcoin dominance is important. And then you can use either others or total 2, total 3 for the altcoin market. Maybe others if you're trading mid caps like Sui or Tau or Pepe or Fortcoin. And something like total 2 if you trade Ethereum and majors. Right, so it depends a bit on what you're trading mostly, but I would say USDT dominance is the cheat sheet for all of them. You don't have to understand all of these. If you just use Bitcoin, USDT dominance, Bitcoin dominance, I think that's absolutely fine. You'll get far enough with that. Especially during my strategy stream, I heard that there are many indexes to consider. Now, of course, I do look at them, right? They make up my system. But you don't have to know all of those. You don't have to make it that as complicated, right? If you only understand one of or two of them in a good way, I think you should be fine. Especially with USDT dominance, we've discussed it many times. This is a cheat sheet for the market. Look at the perfect range it has been moving throughout the cycle, right? This alone has helped you to identify several tops and bottoms for the cycle. And this is why I say that it is very important here to understand if this is breaking out or not, because that will help you predict where the market is headed. And if you get this flip or 4.60, it is already a change of structure, and you know the market is cooked for a few weeks. On top of what we said about BTC, right? Did we look at BTC-D? Of course we did. Nothing changed. We do have that. We do have that 3-day bullish divergence on BTC, picked up by the Woods bot as well. But we do not have an market structure break yet, which is positive in the context of this 3-day bullish divergence. But as I said, as long as this is a 3-day bullish divergence on Bitcoin dominance, I'm a bit cautious regarding exposure, especially altcoin exposure. I think ETH is fine, Bitcoin is fine, obviously. Altcoins, not super optimistic, but we still need some form of break of structure here. If you get this, and especially this, I think with the reclaim of this area here, this will start making new highs, or at least test cycle highs. And this could lead to a lot of trouble for the altcoin market. And I do think that this will accelerate if the 3-day bearish divergence on Bitcoin accelerates, and if Bitcoin starts losing significant areas. But yeah, this is still higher time frame, right? It shouldn't be necessarily relevant for lower time frame trading. All right. I think that's it from my side. Don't have much more to cover. I think it's pretty clear what we think about the market, both on lower time frames and higher time frames, right? No reason for me to change any bias, to be honest. Absolutely no reasons to say we can change from a cautious approach to a bullish approach. Obviously, the more we drop, the more bullish I get. Right? I've been joking around wanting lower prices when I saw this 3-day bearish divergence, and I suggest you do the same and have a similar approach, right? The more prices rise, the more bearish you get, and the more they drop, the more bullish you get. I think that's the best way to approach the market. You won't see me bear posting while we drop, or if we drop. You will see me getting excited at lower prices, right? We were excited as hell in April, if you remember, if you've been under fundamentals. We were shaking out of excitement. I mean, this is the result, right? You don't want to be shaking here. I mean, at least that's my approach. There are other traders, for example, that are more momentum traders, right? They don't care if prices are low to be buying. They buy when everything is green because they catch breakout plays, and that's fine if that's your style and it's working for you. There's nothing to complain about. But for me, as a higher time frame investor slash trader, I'm excited at these levels. I'm excited at these levels, and I get super cautious when I see higher time frame signs of a local top. Okay. Anything else, guys? I have 10 more minutes. If there's anything you want me to cover. If not, then I think we can wrap it up. Got you guys. Where can we find the indicators of Woods? It's not public yet. I'm testing it for Woods and Crypto Native. So they're still working on it. It still has some bugs, and I'm testing, giving some feedback, and I think it will be available at some point. Yeah, the indicator, this one. It shows you the divergences on RSI and OBV. It shows you a Monday low, Monday high, monthly open, stuff like that. The 3-day also has a bullish divergence, right? And we tested the 50 RSI on what chart you mean? Bitcoin did have a 3-day, right? And we did test the 50 area. Exactly. And I said this is a very important zone because if we hold here, that's a pretty positive signal. If you start finding acceptance below, that's quite negative. Got you. All right, guys. I think we can wrap it up. Covered pretty much everything. And to be honest, like what did change, right? We have pretty much the same narrative, same bias for the past. I would say, when was this formed here? Since August 11th. What did actually change? We've been saying more or less the same, right? And I mean, we've been proven correct so far. We shall see if we get a full approval by the charts or just a half of approval, but it's already paid, right? Already paid off. Our caution signals have paid off. Maybe they will pay off even more. We already have a 10% drop on Bitcoin, 15% drop on Ethereum. Altcoins, let's not start talking about that. Like some altcoins like Tao starting making new local lows. Sui as well. So far we're been pretty accurate, I would say. You're the ones to judge that, of course, not me. And we shall see. We shall see if there's reason to change our approach that we took on August 11th. Remember, we didn't start being cautious now, right? It's easy to start being cautious and bearish when prices are dropping. We did say that there's a possibility that a 3-day bearish divergence on Bitcoin can start forming before it even formed, right? We said that if the price starts to pump higher and it closes, the 3-day closes above this area, we could get a 3-day bearish divergence, and that's not something positive, right? So we were quite good in trying to predict this, and so far it's playing out. So we shall see. We shall see what happens. But again, I can't stress this often enough. The more prices drop, of course, it sucks when you have full exposure and you didn't take any profits, right? But trust me when I say the more prices drop, the more excited you need to be, and the more interested you have to be in joining these streams and hanging around. Trust me with that, right? And I know since you're here, you're all members that follow this approach, and that's the right approach. Trust me with that. You have to be excited when prices go lower. You have to be cautious when prices go higher. It sounds very simple. It sounds like common sense, but trust me, it is not common sense. And the numbers show, right? The numbers on streams here are at all-time highs. The numbers on stream, as soon as the price starts to drop a bit, drop significantly. You're not part of that wave, and you should be proud about that, and you should continue having this approach. All right, guys, let's wrap it up. I'll be on the fundamentals if you need anything. Fourth stream for this week. So I think we had enough, right? We had enough of these divergences. So let's relax a bit. Let's leave some price action to develop. Maybe something changes that we can discuss on the Monday stream. If needed, we will have a weekend stream as well. Until then, stay safe trading. Have a nice day. Take care. And thank you very much for joining and for the engagement. Appreciate it as always. Cheers, guys.